so that we can respond to them?
Mr. Kayandi, I could hear you as well. Yeah, I think we got everybody. Perfect. Okay, great. Thank you very much.
All right, with that, I'd like to call this meeting of the Standing Committee on the Alberta Heritage Savings Trust Fund to order and welcome everyone in attendance. I'm Tanya. I'm the MLA for Fort McMurray Buffalo, and I'm chair of the committee. We'll start off with some introductions here. So we're going to start off to my right, and then I will call on all members individually on the phones to introduce themselves. I also ask if you have the ability to turn on your camera when you speak. And with that, start to my right.
MLA Garth Roosevelt, Vermilion, Lloydminster, Wainwright. Go ahead. Yep.
Sorry. Paul Angel, Chief Financial Officer for Alberta Investment Management Corporation.
Hi, good morning. Great to be here. Amit Prakash, Chief Fiduciary Management Officer, AIMCO.
Good morning. Brittany Jones, Director of Investment Strategy at Treasury Board and Finance.
Good morning. Sheldon Wagner, Director, Investment Policy and Governance with Treasury Board and Finance.
Good morning. Tim Lam, Auditor General's Office.
Morning, my name is Kyle Kozowski, MLA for Sherwood Park.
Good morning, Nancy Robert, Clerk of Journals and Committees.
Good morning. Warren Huffman, Committee Clerk.
Mr. Weeb.
Good morning, Ron Weeb, MLA Grand Prairie Wapiti.
Mr. Kiande.
Good morning, Samir Kayande, MLA for Calgary Alba.
Mr. Bouchard.
Good morning, everyone. Eric Bouchard from Calgary Lougheed.
Mr. Hunter.
Good morning, Grant Hunter, MLA for Chatham Warner.
And Mr. Boychenko.
Good morning, Andrew Boychenko here, MLA for Chatham Valley Devon, and I'm up north visiting First Nations for my truth and reconciliation visits. And if it's okay to have my video off, because I'm at 1 bar of data here, so it will conflict with my speech, I guess, if that's okay.
Absolutely. That's fine. Thank you so much. You look wonderful.
Thank you.
All right. We have a few housekeeping items to address, so we're going to turn to the business at hand. Before we turn to the business at hand, please note that the microphones are operated by the Hansard staff. Committee proceedings are live streamed on the internet and broadcast on Alberta Assembly TV. The audio and video stream and transcripts of meetings can be accessed via the Legislative Assembly website. Those participating by video conference are encouraged to please turn on their camera while speaking and mute your microphone when not speaking. Members participating remotely who wish to be placed on a speakers list are asked to message the committee clerk, and those in the room should signal the chair or the committee clerk. And please set your cell phones and other devices to silent for the duration of our meeting. And with that, the approval of the agenda. This was made available to all members. Does anyone have any changes or additions to the draft? And if not, would someone please approve the draft? Mr. Kozowski approves to, motions to approve the agenda. Can I get a seconder?
No seconder.
No, we don't need a seconder. All right, perfect. With that, moved by Mr. Kozowski that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the proposed agenda as distributed for its October 1st, 2024 meeting. All in favor, please say aye. Aye. On the phones, please say aye.
Aye. Aye.
Aye. Aye.
Any noes out there? Perfect. That motion is carried. All right. Next, we have the draft minutes from our June 24th, 2024 meeting. Do members have any errors or omissions to note? And if not, would someone like to make a motion to approve the minutes? Mr. Rosewell moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the minutes as distributed of its meeting held on June 24th, 2024. All in favor of in the room, please say aye. Aye. All opposed in the room, no. On the phones, all approving, please say aye.
Aye. Aye. Aye.
Any noes out there? Perfect. That motion is carried. The Alberta Heritage Savings Trust Fund Act requires that this committee receive and review quarterly reports on its operation and results of the Heritage Fund accordingly. Here we are today to review the 2024-2025 Alberta Heritage Savings Trust Fund First Quarter Report. The report was publicly released on August 29, 2024, and the copy was made available to the members on the internal committee website. We are pleased to have officials from the Ministry of Treasury Board and Finance, AIMCO, and the Office of the Auditor General joining us to provide an overview of the report and answer any questions that members may have. And with that, I will turn the floor over to the Treasury Board and Finance and AIMCO for your presentation. Please.
Thank you, Mr. Chair. Thank you, Mr. Chair. Good morning, committee members, colleagues, and guests. My name is Brittany Jones, Director of Investment Strategy at the Treasury Board and Finance. I'm joined by my colleague today, Mr. Sheldon Wagner, who is the Director of Investment Policy and Governance at Treasury Board and Finance. We're here to present the results of the Alberta Heritage Savings Trust Fund for the first quarter of fiscal 2024-25. The Heritage Fund began the fiscal year on a very positive note with a 2.1% net of fee return for the first quarter, tracking ahead of its benchmark by 0.1%. This helped establish another new high for the fund, in line with a recent positive trend that brings its total market value to $23.4 billion as of June 30th, a $509 million increase over the $22.9 billion market value that the fund ended at the end of the fiscal year 2023-24. All major asset class categories were positive during the quarter. Equities were the best performing asset class overall with a 3.3% return for the quarter. This was supported by 4.3% and 3.7% returns in global and private equity allocations, which more than compensated for a 0.9% decline in Canadian equities. The overall fixed income allocation returned 1.3%, which was slightly higher than the 1.1% returned by the inflation-sensitive and alternative portfolio. Among alternative asset classes, renewables and privately held infrastructure assets were the best performing during the quarter, rising 2.4% and 1.8% respectively. Overall, market performance was supported by expectations for lower interest rates as broader market sentiment benefited from a moderation in inflation outlook across developed markets, even as challenging economic and fiscal conditions persist. The Heritage Fund has two main benchmarks to gauge its performance. The first is for the fund to outperform a real return target equal to the Canadian Consumer Price Index plus 450 basis points over a 5-year rolling period. And the second is for our investment manager to outperform a passive benchmark by a margin of 100 basis points. These targets represent the returns that the asset management manager AIMCO is expected to surpass over the long run. The trailing 5-year return for the fund stood at an annualized rate of 6.6%, and while this has helped expand the fund's net assets by $5.6 billion since the fiscal year end in 2020-2021, it is still 50 basis points behind its inflation target and 1.1% short of its passive target. Growth assets represent 46% of the portfolio and returned 11.6% over the trailing 5-year period, 60 basis points ahead of its asset class benchmark. Fixed income over 5 years was fixed income whose 1.9% 5-year return on its allocation, which is about 23.5% of the portfolio, outpaced its corresponding asset class benchmark by a similar margin. The main laggard in this regard, however, was the allocation to alternatives and inflation hedges, which represents about 30.2% of the portfolio at the end of the first quarter. Its 2.3% trailing 5-year return fell short of its corresponding benchmark, which is quite based on inflation, by 150 basis points over the same period. The implication is that the allocation to the inflation-sensitive portion of the portfolio did not necessarily help the portfolio with the recent inflationary surge. However, positive lagged effects may kick in for this portion of the portfolio if inflation continues to witness a downward trend in current quarters, or in the coming quarters. Finally, the trend of rising costs did persist throughout the quarter with a $44 million expense, rising $5 million from the previous year. This represents about a 12.8% increase over the same period. This concludes my prepared remarks on the first quarter results, and I will pass the floor over to my AIMCO colleagues.
Thank you, Ms. Jones, and again, good morning all. So I'll pick up from where Ms. Jones ended, in that I'm pleased to report that the Heritage Fund was up 2.1% for the quarter, slightly ahead of the benchmark. Ms. Jones described the key drivers of this 2.1% across different asset classes, and we can get deeper into it as part of the Q&A session. Post June 30th, the markets performed strongly, and as we will discuss in future meetings, the overall return for the fund for the period ending September 30th was also strong. On the markets front, the Federal Reserve in the U.S. as well as Bank of Canada have started to loosen monetary policy, and primarily the focus in the markets has been what the expectation is in terms of the lowering of interest rates relative to what the banks actually do. So thus far, it's been in reasonable sync, other than the expectations perhaps for greater easing of interest rates at the beginning of the year relative to where we are right now. On the credit front, the spreads remain quite tight. However, notwithstanding the air pocket the markets hit in August, the credit markets remain quite robust. The fundamentals are strong, and the defaults are modest given where we are in the cycle. And then finally, on the equities, the upside is limited by high valuations and moderating earning expectations, though it was good to see that the quarter that ended yesterday, for the first time in over roughly 8 to 9 quarters, the best performing sector wasn't technology, it was industrials, followed by financials instead. So the broadening of the growth in the market. So that's been good. Positioning wise, from a tactical asset allocation perspective, we are slightly long. Duration said another way, if rates continue to fall, the portfolios will benefit. Relatively flat on equities, whilst also tilting the equity portfolios towards a value tilt and effectively just taking a more defensive posture given where we are. And finally, from a risk management perspective, the risk metrics that we monitor, measure, report for the Heritage Fund, they seem in a healthy spot. They're well within the limits, and likewise the total fund liquidity, also that we monitor and report closely, that remains in a pretty good spot. And then finally, on the organizational front, we announced that Dr. Marlene Puffer, who was the Chief Investment Officer, she has stepped away as CIO of AIMCO. And as a result, we reviewed how we would structure the investment leadership of the organization, and have a structure now in place that we announced that we think will be very robust, very resilient, and relies on the talent that we have in-house. And as part of that announcement, David Scudlari, who's been with the organization for a few years, will take on the role of Senior Executive Managing Director, Global Head of Private Assets and Strategic Partnerships. Justin Lord will be Global Head of Public Markets and will join the Executive Committee. Justin has been with AIMCO for over 10 plus years. And then finally, Kevin Bong remains in his role as Chief Investment Strategy and Head of Singapore, will also report to Evan Sedal, the CEO. He will focus on cross-market positioning. Mr. Sedal, the AIMCO CEO, will chair the investment committee. We think this is a robust structure and will serve our clients well. I'll turn it over to Paul just for brief remarks.
Thank you, Amit. And again, good morning. My name is Paul Angel. I'm the Chief Financial Officer of AIMCO. Pleasure to be here today. So I want to touch on a few points in addition to Amit's opening remarks. So the first one is our business transformation. So we did refresh our corporate and investment strategies back in 2022. And we moved into executing on our strategy by launching our business transformation program in April of last year. So we've been about a year and a half into it by now. It is a multi-year program designed to simplify our operating model, enhance our investment management capabilities, and replace a lot of data technology. So we are buying an integrated investment platform, and we're building a modern data platform. So the total program cost is estimated at about $130 million over a 4-year period. So on just investment expenses overall, so our costs are charged to clients on a cost recovery basis. So there are really two broad, cost categories. So investment costs and then performance-based costs. So investment costs would be salaries, benefits, technology, data, as well as external manager fees, where performance-based costs are really driven by investment performance. So our cost budgets are approved by our board of directors, and we're also engage all of our clients. We consult with all of our clients on our budget prior to board approval. And finally, every year our costs are benchmarked by a third party, independent third party, against our peers. So over the last 5 years, on average, our costs are about 15 to 20% below our peers. So with that, I'll turn it back to the committee. Thank you.
Thank you so much for that. Now I'll look to committee members to ask any questions they might have on the report. Oh, sorry. Before I forget here, we have a member join us. Please, Mr. Diol, please introduce yourself to the...
Good morning, everyone. Jasbir Diol, MLA Edmonton Meadows, and I'm substituting my friend Gurinder Brar, MLA, Calgary Northeast. Thank you.
All right. Thank you very much for that. For the record, that's an unofficial substitution. There's no paperwork put in, I'm afraid.
He said it was, but I don't know.
That's okay. We enjoy seeing your smiling face. So, all right. With that, Mr. Rosewell had a question.
Thank you for being here, and I'd like to look at the report of the first quarter of the Heritage Trust Fund and highlight some information on page 1. Like you've mentioned, you had a 2.1% return in the first quarter, and I'd just like to elaborate a little bit on how that was obtained, and also we're a little bit ahead of the benchmark, and I don't know, I think this might be below what you try to be above the benchmark, and if we can get some feel for how you are online or whatever for the year. But if we could start with just expand on the first quarter results and also relative to the benchmark.
Thank you for the question. And so firstly, as you've heard us say before, our focus on managing the Heritage Fund remains on the longer term, and recognize that quarter over quarter, there are bumps both up and down from a performance perspective. So firstly, just at a headline level, the 3 categories or 3 buckets of investments that the Heritage Fund is invested in, so all of them performed positively. The money market and fixed income were up 1.3%, the equities were up 3.3%, and the inflation sensitives and alternatives were up roughly just over 1%. So that was good to see all of them coming back, in particularly in the inflation sensitive and alternative bucket, where real estate has suffered post COVID and the rise in the interest rates. So firstly, equities benefited by positive sentiment in the market, and there's been a pretty consistent risk-on mode, which has seen equities, certainly south of the border, up north of 20%, and likewise across the globe. That's been quite positive. Secondly, the downward trend in inflation relative to 1, 2, 3 years ago, that has benefited fixed income market across the spectrum in a variety of ways, and you're starting to see the returns in fixed income also turn around. The real estate finally certainly in certain areas starting to find a bit of a footing. We do think on the office building side, we're still maybe 12, 15 months away from the restructuring to work through the markets. But certainly on the other family of inflation sensitive, such as infrastructure, such as renewables, with the inflation coming off, those asset classes will start to look more attractive, and we're starting to see the green shoots on that front. And finally, whilst on the short term, we clearly the portfolio is not insulated from the geopolitical issues. There is a big election south of the border, and therefore the knock-on impact on policy that may impact the portfolios. So that's where we are sort of from a 2.1% perspective. And then from a excess return perspective relative to the benchmark, so one of the things we certainly keep a close eye on is the 5 and the 10-year numbers. The 5-year numbers still have the material impact from COVID still a part of it, and therefore it is closer to zero, slightly below zero in fact. The 10-year number is a lot healthier over the longer cycle, and so we are confident that given the structure and the diversified nature of the portfolio, the Heritage Fund is well positioned.
Yeah, just on the fixed income, like what is your goal to outperform the benchmark? Like how much? Because it's harder to outperform in a material way. I was just wondering what the benchmark overperformance that you're striving for.
So roughly, so the fixed income firstly comprises all the way from the broader Canadian universe type portfolio. And within that family, there's mortgages, there's private credit, and loan. So across this range, relative to the benchmark, it ranges anywhere from 30 to 75 basis points. And all of this is specified specifically in the product descriptions that we engage with clients on and have been engaging over the last few years.
Okay.
Do you have a question? But
Absolutely. Mr. Kozlowski, go ahead.
Okay, thank you, Chair. So my question is really not about the quarterly report. It's a fine quarterly report. But I just want to on November 6th, we're having our public meeting. And if you recall, on February 28th, the Premier took to the heirs to make a commitment that our fund will grow from its levels now of about $23 billion to, I think, between $250 and $400 billion. And so for that public meeting on November 6th, will you be prepared to answer how we'll meet that commitment that the Premier has made?
Thank you for the question. The Premier did promise a roadmap to the public by the end of the year. And the department is working on a roadmap that will be presented to the public. The timing of when all of that will be communicated is not necessarily known at this moment in time, but we will definitely be ready to speak to the public during that public meeting about what we're supposed to be speaking about, which is the annual report.
I just would suggest that you're going to probably get very direct questions about that, and it might be better to be ready by November 6th. Because I believe the Premier said later this year.
Yes,
Yeah.
yes, but no time has been specified.
Mr. Hunter, do you have a question for us?
I do, actually. So I just
at the 2018-2019 report on the Alberta Heritage Savings Trust Fund, and that it's at $18.2 billion, and so now we're by the end of this fiscal year, it will probably be closer to $25 billion. My question is about capacity and the ability to invest in with more money coming in. I mean, for many years there was no new money coming in. We were using it, and governments were using it to do operations. How are you restructuring your capacity or capabilities of this new injection of money? Do you have a plan for that?
Well, thank you for the question, and a great question. Managing capacity is very important for the health of the portfolio. So a couple of things. So first and foremost, one of the things that we've done roughly over the last 2 years or so have started a function group headed by David Scudlari that focuses on strategic partnerships. What that does is, relative to using or investing the dollars across a wider range of third-party partners, there's a focused and intentional effort to do that with a smaller group of entities which we have a stronger partnership with. And the benefit of it is that we get better access, particularly in the private markets, to transactions and deals. We get better economics, particularly to the extent that we have co-investment or direct investment opportunities. And that in of itself, and that allows us to, in many ways, punch above our weights as we take in dollars, additional monies from clients, including the Heritage Fund. The second leg of increasing the opportunity set as the size of the fund grows is to ensure that we are looking not only at current opportunities but a growing opportunity set. And therefore, as part of our investment strategy development, one area that we've been focused on is looking at opportunities in Asia as well. And part of that thinking is what led to opening up of the Singapore office, small footprint, but at least that is focused on infrastructure. So that happened over the last 12 months. And then finally, the developing an operating platform that is built and fit for purpose for both the larger dollars in terms of AUM, but equally fit for purpose from incorporating newer technologies. And that was the update that Paul provided, that Mr. Langell provided, in terms of improving the operating platform. So those are some of the things, Mr. Hunter, that we've been focused on.
Great. Well, thank you. And, it's exciting to be able to see the new movement. I mean, it's been many years that Alberta Heritage Savings Trust Fund hasn't had that new injection of cash. And so I'm excited. I think that Albertans are excited about seeing what you guys can do with that. So thank you so much.
Thank you.
Rise in expenses. I assume some of that is, as you just alluded to, the cost of Singapore office, the cost of New York office. To what extent would you say, because are these like in support of like increasing the allocation to private credit, for example, or is there going to be a substitution effect where you're going to be where we're going to see declines in third-party management and associated declines in third-party management fees that are effectively going to be insourced?
So maybe I'll just start and turn it over to Paul. So firstly, again, thank you for the question. The strategic allocation or policy mix is determined by clients, including the Heritage Fund. We certainly move the portfolio around within the ranges associated with those allocations. So there may be some movement, or there has been some movement across asset classes, but by and large, big portion of that decision is something that we are recipient of. Now, in terms of costs, I will turn over to Mr. Langell to speak to that.
Thank you, Mr. Prakash. So from a year-over-year perspective in the report, the expense increase is primarily driven by investment performance, primarily external managers. As what I said earlier on, I think we are making a significant investment in our technology and data, and that's going to be over a 4-year period. And we have seen our costs increase over the last number of years. I think some of that was really catch-up underinvestment that we need to make right now. But I think as we work through this program, our costs will plateau. And then the expectation is they'll start coming down as the AUM increases. So from a basis point perspective, we should see a flattening and then a decline in the future as our AUM grows. But the cost increase you're seeing in the Q1 report is predominantly due to investment performance related costs.
Thank you. That's really interesting. What proportion of
Is because of investment performance.
I think about
percentage?
4 million of the cost year over year is investment performance related.
Okay, thank you. And
Do you have some sort of way of looking at costs, like assigning them to strategy, or is that just too complicated? Like by strategy, I'm thinking like, you know, private credit, for example, or public markets, or like, because some of the I assume like private equity is, for example, just more expensive. Is that a right way of thinking about it?
In general, the illiquid asset classes like private equity is more expensive than the liquid ones like public equities and public fixed income. From a third-party costs, so external investment management fees and performance fees, those are contractual and they're specifically assigned to the asset class from which they work within. Our internal costs, we do have a cost recovery model or an allocation model based on predominantly effort and then data cost, technology costs that is used in each of the asset classes. But you'll see over time, you know, the illiquids like private investment asset classes are more expensive or more costly. I think the fact of the matter is it's just more manual, you know, from an operating perspective. And you don't have necessarily the scale as you do in, let's say, public equities or fixed income, where you can process a lot of transactions, you know, using technology. For the private equity side, it's much more hands-on. And you can imagine deal sourcing, you know, deal pursuit costs, et cetera.
Thank you. Can I keep going, or are there other questions?
We'll alternate to Mr. Bouchard, and then I'll come back to you.
Okay.
All right?
Okay, great. Thanks.
Mr. Bouchard.
Great, thank you, Mr. Chair.
Inflation-sensitive and alternatives assets posted a 1.1% return in the first quarter. Real estate, the largest category of holdings by percentage at 16.7%, only shows 0.5% return, compares to 1.8% for private infrastructure and 2.4% for renewables. Now, you touched on real estate. I guess my question is, why is it that the real estate performance is noticeably weaker than private infrastructure and renewable resources?
Thank you for the question. The real estate portfolio, amongst other things, holds office buildings as well as retail investments such as Yorkdale shopping malls, etc. And particularly since COVID, the office sector has certainly been impacted as many businesses initially resorted to work from home. And the way back, however, hasn't been in many markets, hasn't been to the level that prevailed pre the pandemic. And so they were impacted in a significant manner. Likewise, the retail sector also impacted by the COVID, but that has started to come back quite well. But there is some change in composition in terms of what you see in the shopping malls and in the retail sector. Finally, there's always opportunities, particularly as areas, as sectors of the market, sections of the market are weak. So, for example, even in real estate, we're starting to see opportunities in grocery-led retail malls. We bought something in Calgary over the last 12 months, which we think is quite attractive. And in terms of the other members of the inflation sensitive that you mentioned, infrastructure, renewables, etc. So one of the things that the infrastructure portfolios have been impacted by as the interest rates went up is the funding costs, particularly if they were looking to expand. That went up and therefore impacted the portfolio. And likewise, in addition to funding, also the operating costs to the extent that the interest rates were higher. So from both of those perspectives, as we look in the rearview mirror, they have weakened. The longer term, both those asset classes have performed very strongly. Thank you.
Great, thanks very much.
Mr. Kayonde, you had another question?
I do. Thank you very much. Thank you very much, Mr. Chair.
This is a question about benchmarks and how they're determined. I think I may have asked about this like in every single meeting I've been to, and every time I find more things to talk about, I guess. So, how would you describe the volatility of the value addition, like on a quarterly basis, on an annual basis? Have you looked at whether it's related to fund returns, to specific factor risks, or is it really truly an alpha that's independent of all of those factors?
Excellent question, and one of the hardest in our industry in terms of assessing skill versus luck. All else equal, longer the data series, better confidence you have whether a manager truly has skill or luck. So again, couple of thoughts. So first and foremost, we, in addition to tracking performance, of course, that we see in front of us, we diligently also track various metrics of risk, both on a forward-looking basis as well as on a backward-looking basis. And one of the things I can share with the committee here, one of the lessons learned, particularly after March 2020, was that in some of our portfolios, some of the, if you will, excess return or alpha-seeking strategies, and pardon sort of the geek speak for a minute, were pro-cyclical in that those strategies tended to do well when the markets were doing well, and less and poorly when the markets were doing poorly. And so one of the things that we've been working particularly on the equity portfolio is to be very intentional and deliberate about reducing those types of excess return seeking strategies which are pro-cyclical. So you want ideally your alpha strategies to be kicking in as the markets are turning down, and vice versa. So that's one. Number two, over the last year and a half or thereabouts, in consultation with clients, we've launched an absolute return strategy, and what that does is that insulates it from the ups and downs in the market. And this year, that strategy is up, I'm going to say around 6% or thereabouts. But again, the idea is exactly to your point that you want to infuse more counter-cyclical sources of excess return rather than ones that are more aligned with the market cycles.
So how would you?
So then if I'm paraphrasing what I believe you said is that AIMCO or the Heritage Fund has had a tendency for alpha generation to be more pro-cyclical than maybe is truly alpha. But now with changes in strategies, are you mitigating that? Has it been completely corrected, do you think? What's the prognosis?
So I'll rephrase what you described. So it wasn't that we persistently had cyclical alpha, it was simply in pockets of it, in a way we did have it, and that is the part that got corrected. The second part, just for completeness, A big chunk of the portfolio is invested in illiquids, and the notion of, alpha in a traditional public markets thing doesn't really translate over. So that's a big chunk of the portfolio. So what I was referring to was, again, a specific area within public equities which has been improved upon. The second part, which may be a bit of a cliche, is part of the journey of any successful investment platform is to be learning constantly for the markets and evolving and improving. And that's the category that I would describe the focus, the changes that we've made. And finally, because the markets evolve, the macro environment evolves, it isn't something that is necessarily completed. This is something that we would need to be mindful of. 5 years from now, 10 years from now, I'm certain.
Thank you very much.
If there are no further questions, the committee should now consider a motion to receive the first quarter report.
I move that we receive the first quarter report.
Thank you, Mr. Kozowski. Mr. Kozowski moves that the Standing Committee on the Alberta Heritage Savings Trust Fund receive the 2024-2025 first quarter report on the Alberta Heritage Savings Trust Fund. All in favor of, please say, I'm sorry. Oh. Right. Is there any discussion on this motion, please? Seeing none. All in favor of the motion, please say aye.
Aye.
On the phones?
Aye. Aye.
Anyone opposed? Seeing none, that motion is carried. That will conclude today's business with respect to the fund's first quarter report. I'd like to thank our guests from AIMCO and the Treasury Board and Finance, as well as the Auditor General, for being here today. Thank you all so much. Thank you for your service. All right. AIMCO has provided a written response to questions asked at the committee's June 24th, 2024 meeting. The response was posted on the committee's internal website for committee members. Are there any concerns or questions about that or other issues? I see none. On the phones, do you have any concerns, questions, comments? I see none.
No, Chair.
Yes, go ahead, Mr. Kozowski.
Yeah, not wanting to draw out the meeting, but that November 6th meeting, will we be in this room? Has that been?
Yes.
And I just will note that Airdrie is having Airdrie evening across the room on the same floor. So, I mean, I just want to make sure we have the space required for it. I don't know that it'll change attendance, but.
No worries.
Yeah.
No worries. Yeah. All right. With that, I think we can conclude today's meetings. The committee's next meeting will be the event on November 6th from 6:30 to 8:30 in the evening. So with that, if there's nothing else for consideration, I'll ask for a motion to adjourn. Mr. Rosewell moves that the October 1st, 2024 meeting of Standing Committee of the Heritage Savings Trust Fund Committee be adjourned. All in favor, please say aye.
Aye.
On the phones?
Aye. Aye.
Anyone opposed? That motion is carried. This meeting is adjourned. Thank you all so much.